The stock market and the crypto market are down based off of news of a new variant coming out of South Africa. This is the belief. And in this video, I don't really want to say too much on the topic because YouTube is known for censoring the topic, but I'll let South Park tell you.
It's a new variant, the COVID Delta Plus rewards program variant. Everyone, please, we cannot panic.
And with this news, there are fears of upcoming lockdowns. For example, the UK temporarily suspended flights from 6 African countries due to the variant. Israel barred travel to several nations after reporting 1 case in a traveler. 2 cases were identified in Hong Kong, and Belgium also confirmed a case. So at the moment, this is the belief, but it's not a direct cause and effect. No one really knows right now why the markets are crashing. This is just a common belief, but there may be other reasons that we don't know about. For example, a spokesperson from BNY Mellon stated Friday is the day after Thanksgiving. Probably not as many traders on the desks with an early close today. So potentially lower liquidity is causing some of the pullback. So right now, no one's really sure exactly what's causing it, but the belief is that it is due to this new variant. And if this is the cause, it does make sense for most of the stock market because a large portion of the stock market is tied to the physical world. So if there are lockdowns in the future, it will affect travel, it will affect transportation, and it will make it difficult for those companies to be profitable. But at the moment, we're still waiting on more details. This is what the mainstream news is telling us right now, but we don't know what they're going to say in the future. We don't know how lethal this is or how transmissible it is, but this is what we know at the moment. And based off of what we know at the moment, or at least what the mainstream media is telling us, it does make sense that these companies in the stock market are not doing that great, especially, for example, travel companies. But what we did see during the pandemic is that companies that were basically in the digital world did very well over the pandemic. For example, Zoom. And we also saw over the pandemic that cryptocurrency did very well. Yes, at the very beginning, there was a dip, there was a crash, but over the last couple years, cryptocurrency has done very, very well because cryptocurrency is basically entirely in the digital world, right? So if there are lockdowns, right, as there were over the last 2 years, more people are on their phones, more people are on their computers, and crypto did very well. And right now in this moment, we're unsure of what's coming next. No lockdowns, yes lockdowns, but either way, my thesis did not change. Bitcoin has no top because the dollar has no bottom. There has never been a civilization or an empire in history where the money supply was controlled by centralized parties, by human beings, and they did not debase the currency. Always in history, when centralized parties control the monetary supply, they debase the currency. And because of this, over history, wealthy people have always held assets rather than holding the fiat dollar or the fiat currency of their government. And right now it's even worse because over the lockdown, 40% of US dollars in existence were printed in the last year and a half. So right now it's even worse. So this was, I guess, a secret of the wealthy in the past, but not really a secret anymore. For example, guys, just so you know, when you see these billionaires on the Forbes list, they don't have billions of dollars in their bank. Those billions are represented mostly by hard assets and by stocks. So right now in this moment, over the last year and a half, over the last 2 years, everything is going up because people don't want to hold fiat money. We're seeing cards go up, collectibles, cars, watches, everything. So right now in the moment, holding US dollars is a very, I would say, dangerous thing to do. It's even gotten to a point right now where, at least for me, I don't want to hold too much money in a bank. I'd rather hold it in stablecoins at the very least, because right now in crypto, you can earn 7, 8, 9, 10% APR on your stablecoins, right? So Celsius is a good option. The only downside is that they don't have an exchange connected to them at the moment, and you can't connect your bank account. BlockFi is also pretty good, but I personally like to use Voyager because it can be connected to a bank and 9% interest APR. So this is part of my crypto portfolio, right? Holding stablecoins. So when it comes back to this current market right now that we are unsure, am I buying the dip? And the answer is yes, but not because of this specific situation. This is because I buy the dip by default because I dollar cost average. And you'll know this if you watch my previous videos, but I don't dollar cost average blindly, right? When it comes to dollar cost averaging, if we want to keep it simple, basically are we buying something that we think in 5 or 10 years will be worth more than it is today? And when it comes to crypto, we know for the most part that altcoins follow Bitcoin. So when Bitcoin does well, altcoins many times do even better, right? So if you want to make money quick, you want to become rich in crypto, altcoins over Bitcoin. But on the opposite end, altcoins can also make you lose money faster, make you become poor faster because they drop harder than Bitcoin. And as you guys know, I buy altcoins and I buy even NFTs. These are highly risky, so I'm not opposed to it at all, but I make it a smaller percentage of my portfolio because, as I've said also in previous videos, because these are smaller coins with smaller market caps, a small amount can go a long way. I don't really have to risk much. So I'm currently continuing my dollar cost average, right? Small amounts over a period of time. But at this moment, what I am not doing is making any big buys because right now we are unsure of what's happening. For all we know, the crypto market may continue to decline. Who knows? Maybe tomorrow we wake up and it's up. The thing is, we just simply do not know. And when I make bigger buys, I wait for things to settle down because in this moment, if I were to make a big buy, I would potentially be setting myself up for catching a falling knife. This is not what I want to do, so I'm continuing. And when it comes to dollar cost averaging, not everything comes back in the future. Like we said, for the most part, altcoins follow Bitcoin. But if we look at how far coins are from their all-time high on this website, coingolive.com, which I will leave a link down below, you can see that there are currencies that still have not reached their all-time high from 3 years ago. Now, I'm not picking on any coins, but I want to show you an example. For example, XRP 3 years ago since its all-time high. Bitcoin Cash 3 years ago since its all-time high. XLM 3 years ago since its all-time high. EOS 3 years ago from its all-time high. So in dollar cost averaging, I don't just go into anything blindly, right? I go for bigger cap coins. And by the way, these examples I just went over, these were the big cap coins of the last cycle. Again, I want to mention, I buy altcoins, I buy NFTs, I keep them as a smaller percentage on my portfolio. But when it comes to these bigger coins that I believe in the next 10, 20 years, I continue to dollar cost average. And there's probably many of you wondering, what's the perfect allocation for a portfolio? You're always looking for videos. What's the perfect allocation? But the answer is there is no perfect allocation because we're all in our own unique situations, right? For example, there might be someone out there, maybe it's you, that have 100% of your portfolio in extremely low cap risky coins. But for you, maybe that's okay, right? Maybe you have a very good job, very good income. You don't really have responsibilities. You don't have anyone dependent on you. So that's money that you don't even really need in the short term, or it's money that you can afford to lose, right? So we're all going to be in these different unique situations. But I think something we all have in common is that we should be playing with money that we don't need in the short term or money that we can afford to lose. And in terms of dollar cost averaging, if you want to go into detail and learn exactly how to do it, go ahead and watch this video, link right above and in the description down below. And don't forget to like this video. Thank you for listening, and I'll see you next time.